What's up, SMD fam? This video is going to be about Fibonacci retracement. Putting this video out because I believe it may be helpful for those people that want to get into using Fibonacci retracement, applying technical analysis a bit more to their chart. Everybody go ahead and thank Pinstripes for this. He's the one that told me about this video, and he's the one that got in the way of me enjoying my Sunday afternoon. For those of you that know, Pinstripes is a friend, tough love, but we're all going for his kneecap. So hashtag kneecaps in the chat whenever you see Pinstripes typing. Fibonacci retracements, they're basically horizontal lines that indicate where support and resistance are likely to occur. This being said, it's an area where price could stall or reverse. Each level is associated with a percentage: 23.6, 30.2, 61.8, 78.6. While 50% is not considered to be a Fibonacci ratio, it is included just because it said that at 50% from its high or low retracement of a stock, it tends to reverse once it touches that level. Not every single time, but sometimes 50% is a level where a stock tends to retrace, whether it be from a downtrend or an uptrend. Golden ratio is said to be between 38.2% and 61.8%. I have 50% included just because it's between those two levels. Fibonacci retracements can be used to place entry orders, determine stop loss levels, or set price targets. An example here would be, let's say a stock's in an uptrend and it begins to sell off from its high. So it's retracing. That's what we call a retracement. It starts to go down, touches 61.8% level, or maybe 50%, or maybe 30.2%. And it bounces from either one of those golden zones. You put your entry to go long because it's showing signs of continuing a push up after retracement from its high. And you would put a stop loss right below where it bounced from, right? So that's one way of using them. That's one way of how I use them too. Back when the whole crash began and SPY found its bottom, I began to use Fibonacci retracements. So I wouldn't say I've been using them for the longest, but I have been using them in a way that it's benefited me for the most part. The way I had Fibonacci retracements set up during this crash and once it found its bottom is from its high of 339.08 to its low, 218.26. I had these levels, not exactly these, the ones I had were all the way from 0 to 1.272. I had all of these turned off. They're all one color, and they were not these colors that you see right now. To give you kind of a quick rundown of how these zones are respected, take a look of when we began to recover. We got near the zone, rejected, came back down, tested the support, pushed right back up, broke through this level, but it kind of stalled for a bit, came back down, pushed back up, got rejected here, pushed back down, pushed back up, pushed back down, held. Even though it broke through, it held, it made the push back up. Boom, we broke, came back down, consolidated, and once we broke through this level, we really took off, right? We really took off. So I'm sure that gives you kind of an idea of how you can identify support and resistance levels through Fibonacci retracements. Let me go ahead and tell you how I personally use them now, because I have switched it up quite a bit. Had to drink some water. But quick little technical analysis on SPY. So Fibonacci retracements, this swing high right here, once we hit it, SPY had a nasty retracement all the way down to here. We consolidated for a bit, and once we broke through this level, we pushed aggressively, right? So I know that this is definitely a swing high to a swing low to consider. So I would draw the Fibonacci retracement from this swing high to this swing low. And you could kind of see on the smaller time frame, 180 day 4 hour, how these zones were kind of respected, right? How they would push, to the upside, come back down, push, get rejected, push, right? You get the idea. But if you take a look at the 1 year daily time frame, we can see that once SPY hit its high, tech began to sell off, began to drag down SPY. This previous swing high was validated as a very strong support, and I see it as a very strong support. Reason being is because although bears were able to push SPY below this, bulls were able to push this back up. So to me, in order for me to remain bullish, well, not completely bullish, but a bit more bullish than bears, is for us to be trading above 323.41, right? If we start trading below that, 313 is in the picture, and that's where I may shift from being bullish to bearish. What may push us down there? Any more worse news from Trump having COVID, stimulus, difficulties of not getting passed, no good vaccine news. Basically anything revolving around those topics, or a very negative catalyst, right? Right now, SPY is above this level, and it's currently trading at the 127.2% level, which is around 330.66. We have the 55 EMA right around there. So if we end up retesting the zone and we bounce from there, I may enter a SPY position to go long just to try to retest 339. Or it might be even a day trade. Like if you go into the smaller time frame and you see SPY touch this, as you can see, touched 3 times, bounced off every single time. You could have entered a call here, sold anywhere from around here, enter another call once you see the bounce, and enter another call when you see a bounce. So you could kind of see how Fibonacci levels, for the most part, are well respected, and how they can really help you determine your entries, right? So that's one thing to keep in mind. So as long as we keep testing 330 and bouncing from there, I'll be entering calls. If we break below that, might go short for a quick scalp. But that's that. I hope that gives you kind of an idea of how to approach SPY with Fibonacci retracements. Another ticket I want to go over with Fibonacci retracements would be NVIDIA. For those of you that don't read staff notes, I highly recommend. Brandon posted some amazing information about the market for this upcoming week, and Bias has been killing it with posting his watch list and his personal levels. He included NVIDIA, and if you would have taken a read on staff notes, you would have been able to take these trades without us having to post the plays. So if I draw from this swing high to this swing low, I see that at the golden zone, 50%, NVIDIA was kind of struggling. I would put a price level right here because that's where it began retracing once it hit its high, just to kind of see what happens once it touches right around this price level. But as you can see, 50% was an area where it was struggling. Remember what I said, 50% is not considered to be a Fibonacci ratio, but it is used because whether it be from an uptrend or downtrend, in this case a downtrend, NVIDIA began to push, and at 50% it was kind of stalling, it was kind of struggling. I think you can see this better on the 180 day 4 hour. You can see that around this level it was kind of struggling, and it retraced. Once it kind of stalled for a bit, it retraced all the way back down to around 477, around there, right? But once it retested it once again, we can see on the 180 day 4 hour that once it came to this zone, there was quite a bit more volume on this specific candle compared to these previous candles. So definitely combine break of levels with volume, because volume is your friend when it comes to confirmation, along with candlestick patterns and all those other patterns that you see, right? So yeah, Right now Nvidia is currently coming back down. I want to see it either bounce from the 55 EMA, which is around 519.24, or I want to see it come back down to 514.35 and bouncing from there to enter a long position, right? But with this upcoming week, it might be a bit difficult to place some tickers just because of how uncertain the outlook is for the markets due to recent news. So staying cash can also be the best option to do if this becomes a bit tricky. And believe it or not, Fibonacci levels are also ones that I use to chart contracts. Yes, I do chart contracts. It may seem funny, but when you chart contracts, you can basically see where people tend to buy up and where people tend to take profits. That'll be probably another video just because I don't want to make this video too long. But for the most part, this is how I would use Fibonacci retracements. Now that is for the longer term, like the longer term outlook, you know, the bigger levels, the bigger time frames. Just to mention it real quick, my favorite time frame to use Fibonacci retracements are the 1 year daily time frames. Let's say if I want to day trade, how I would use Fibonacci retracements, I would go on the 5-day 5-minute, right? I would identify a swing high to a swing low. In this case, I would probably use this right here, the swing high to this swing low, because this is kind of where like it was bottoming out. If you take a look at the 1 day 1 minute, you could kind of see that it was kind of like stalling around there and it was acting as good support. So that would be my swing low for the Fibonacci retracement. And you can see that once it broke the golden zones, it kind of broke that 50% area to look out for, to consider possible retracement back to the downside. But it broke these levels with heavy increase in volume. That would have been confirmation of getting calls, and you could have sold either between 100%, 127.2%, or 161.8% fib levels. These are the top 3 levels that I look at to take profits. Profit taking honestly relies on what you're happy with in terms of dollar gains or percentage, or like I said, Fibonacci retracements, Fibonacci ratios, Fibonacci levels. So that's how I would approach using Fibonacci retracements when it comes to day trading. So like I said, break of levels, your confirmation to make the follow through a bit safer is heavy increase in volume. But this is all that I have for now for these levels. I don't really have much more to explain about this. If you guys would like to see different ways of using this, or like different coefficients, YouTube would be the place to go. This is honestly just how I use them. I don't want to go too crazy explaining everything, because I feel like if you want to be more informed about this, research on your own time is more ideal, because you learn more. But obviously, if you have any questions, or if you want to try out using fib retracements onto your charts and you want to practice, hit me up and I'll gladly assist you and kind of guide you through on how I use them if this video was not enough. But this is all that I have for now. I'll be seeing you guys in chat, and I'll be seeing you guys tomorrow. We'll probably be live on voice chat to see what trades we can take, because the market may become a bit tricky. So we kind of all want to work together as a group and look for tickers that we can all make money on, because honestly, working together and making money together is the best feeling, because teamwork. That way you understand the reasoning behind why we enter plays, and you learn a bit more, right? And if you understand the reasoning behind a play, you might understand if it's a play for your portfolio or not, because some of the plays we may enter may cost a bit more than what you're able to afford in case things go wrong. So if you guys want to hop into voice chat, you know, you're welcome to join. The more people, the better. Even if you don't talk, just having you there means a lot. But as of right now, I hope you enjoy the rest of your night and be prepared. Take a look at staff notes and see what you can find out to help you for this upcoming trading week. But thank you guys for taking the time on watching this video, and hashtag kneecaps at pinstripes.